markets. So let's go to the trading floor in Chicago and find out direct from the trading floor at the CME Group what's going on. There's Tim Evans. He's with Longleaf Trading, and he joins us right now. Tim, good to have you with us here. A very momentous day with wild action in the grain trade. That's a true summer market we're looking at, huh?
Yeah, nice to be with you today, Marlin. Yeah, today, abbreviated trade. I mean, obviously, you know, the weather's really driving this overall market, and that's carried over beans, corn, and you know, all the various wheat markets. So, you know, with this abbreviated day, you know, we started off pretty hot this morning, but, you know, in a few of these markets, we're still a bit of a distance away from critical resistance levels that I think it was apparent we weren't going to be accomplishing today. So I think the markets are backing off a little bit as the tide's coming back in before we go into the close.
Who do you think are the big buyers today?
Breaking down the soybean market, I mean, what's really interesting is that the fund position, the non-commercial fund position, actually had built up a record short position of 118,000 contracts. It's the largest fund position we've ever seen. You know, so given what we've accomplished, especially in soybeans, you know, we've taken out some pretty critical short-term and intermediate-term resistance levels. So, you know, I think what's happening as we're moving through some of these resistance levels, that big short position of 118,000 contract is driving short covering rather, which is obviously giving the market a pretty good lift higher. So I think that's a lot of the market action we're seeing today.
And I want to remind everybody what we've been seeing. We talked about the fact that Chicago and Kansas City wheat did go limit up 30 cents higher earlier this morning. The wheat market in Minneapolis has doubled the limit range here. They can actually move 60 cents if they have to today, right?
Yeah, and that's correct. And, you know, this is obviously a breakaway market. I mean, the extent of the damage we're talking about yet, still unknown. How much additional damage is coming, still unknown. You know, we're really not touching on any significant technical levels that we can draw from. You know, so this is one, if you're long, the trend is your friend. You know, if you're on the other side of that, the trend's your worst enemy here.
Very good, good point that you make there. Tim, I want to bring you back here in a little bit and get your thoughts on what we're seeing in the cotton market and also in the livestock trade when we come back. Our guest, Tim Evans, will have more right after this.
There are micronutrients throughout the league, Joe. But let's take a look at Micro 500.
Yeah, the synergy of the micronutrients in this guy have raised the bar on the field. Those others are just wannabe Micro 500s.
So you think this is the player you'd want on your team?
You bet. Whether it's offense, defense, special teams, Micro 500 always has a place on the field.
Okay. You can check out Micro 500 stats at agroliquid.com.
Lionel Snipes, HLS Communications, St. Louis, Missouri, and I love RFDTV. Well, most of my clients are senior living properties. RFDTV is the most watched channel. It feels like home when they can watch those type of shows, you know, so we appreciate it. Thank you.
This program is brought to you by VetGun with the new AIM-A Apomectin Vet Cap from AgriLabs.
Happy to be joined by our very special guest. It's Tim Evans, and he happens to be with a company called Longleaf Trading. He is the owner of Longleaf Trading. He joins us from Chicago. And Tim, we talked about the wild moves that we saw in the grain trade, but not all the crop markets are surging ahead like what we saw in the grains. Cotton market has had kind of a tough go here today. The October contract is down 68 points, and December down 28 at 68.31 right now. It is 30 points off its earlier low of the day, but about that far from our high as well. I just wanted to point that out because I guess it's not totally one universe there on the crop side of the market. There is a few negative signs out there today.
Yeah, I mean, the big differential there is the fact that the majority of cotton is grown here in the Midwest and Northern Plains, and it's not getting the type of weather that's been driving this bullish action in the other big grain markets.
That's exactly right. The cotton belt down there around the Gulf is getting a lot more rain, and it sounds like they're probably looking pretty good for their growing season. I do want to take a look here at this cattle market and the hog market with you. Let's take a look at lean hogs and live cattle and feeder cattle. And on the live cattle board, we have August down 22 cents now. Now it's down just 18 cents at 116.12. This has been kind of a yo-yo affair here today. We started out firmer, went lower, and in some cases sharply lower. Now we're almost back to unchanged again. October live cattle down 20 at 115 even, so it's 80 cents now off its earlier low, and that far from our high too. Feeder cattle trade, let's look at that, where we have the August contract on the feeder market showing some sharp losses earlier today. Right now, we have the August feeders down $1.20 at 146.72. So we've come back almost $1.75 now from our earlier lows. September only 97 lower at 147.05. What do you make of that action? What if they come back and are able to close almost unchanged or so by the end of the day today? What would that mean?
I personally wouldn't draw too strong of a conclusion off of that. I mean, I think it's really a similar kind of price action we saw on Friday. I mean, with these hogs, breaking out to the levels they are, and trading with such strength, I think we're seeing some spreading action from hogs to cattle that really is providing it kind of, semi-support, so to speak. But I think fundamentally, I mean, at Longleaf, we still favor more downside to come in cattle. We saw that, weights were up 8 pounds going into the end of last week, which this time of year is kind of not normal. A lot of supply coming at the same time. You seasonally, you see consumer demand begin to really fall off. So I think fundamentally, again, we still favor the downside here, but this hog market is so strong that spreading action, can spill over to the live cattle, which I think we're seeing today.
Okay, let's go take a look at the lean hogs right now. Now remember, they closed August $3 higher Friday. Then they sold them off today, and they could not hold them down. We have August lean hogs coming back to 84.35 right now. That would be 60 higher than Friday's close. October up 95 at 71.40. Are you still buying hogs here, Tim, or are you a seller at these points here?
No, I'm not a buyer or a seller here. I mean, we obviously, from a technical standpoint, we just took out critical resistance. So I think, again, similar to what I referenced in soybeans earlier, I think we're seeing some short covering, but we're also seeing new buyers in the market. I mean, at the end of the day, cash prices have remained firm, and so as long as this pork market on the cash side continues to remain firm, these price levels in the futures we're seeing are justified. Okay. A lot of traders are really looking at the fact that there may be more demand in the market than what we had expected. Some of those numbers, we get them kind of in a delayed way, so it's really hard to know in real time what you're dealing with from a demand standpoint. But, that seems to be pretty a general consensus here with those participating in the hog space. Well,
I'll have to leave it there, and thanks, Tim. We'll talk with you again on the Rural Evening News tonight as well. Tim Evans of Longleaf Trading in
Happy
Chicago.
July 4th.
Yeah, thank you. I appreciate it. You too. Good stuff from Chicago.